I think the data coming in are certainly consistent with an economy operating at or perhaps a bit above trend. So I don't think they're in a danger zone here of falling behind the curve. Moreover, they've made very clear that if they do see any softening in the labor market, it looks like they won't hesitate to start cutting. So there's risk management here, agree, but I think they're in a good place.
You were there during the Trump first trade war, as was I.
Yeah.
You understand, you were briefed about the inflationary impact of the first trade war, and you probably remember that the briefing was tilting toward saying that the tariffs were inflationary, which didn't turn out to be.
Yeah.
And right now, the mainstream economists, Wall Street economists, are uniformly saying that it will be very inflationary again. What's your thought on that?
Well, there are a couple of things. First, if anything, during my time at the Fed before the pandemic, inflation was running a little bit low. The main thing that emerged at that point in 2019 was that the trade war, concerns about the trade war, were very negative on economic activity and sentiment. I do think the details will be important. I think that in particular, there would be an inclination, depending on how they're structured, if there were tariffs, to try to distinguish between if it's moving up the price level like a value-added tax, whereas it's inflationary. But I think the key thing for your listeners to bear in mind is that's a decision the Powell Fed does not have to make now. They made it very clear. 2024 rate decisions are based on 2024 data and outlook. They'll have plenty of time to reassess and think about this as they go into 2025. So, good question, but I don't think it'll be a factor now.
You defended William McChesney Martin. Paul, one more question in this section with Rich Clarida.
All right, let's assume the Fed starts cutting in September. Then what? How do they prosecute this policy to get rates down? Is it every other meeting? How does that work?
Well, the trite answer is it's data dependent, but I think they've acknowledged that if they cut once, they will be thinking there's more than one cut. We'll get good information on that in the projections. We'll get another set of projections in December. Here's what I think. I think there are basically a couple scenarios. One is a very, very soft landing, in the spirit of the Olympics, sticking the soft landing. In that case, the economy just chugs along a trend. Unemployment doesn't go up. Inflation moves gradually down to 2, and then they can gradually cut rates as inflation falls. Another scenario is the economy slows more sharply, and then I think they can cut more rapidly. I do think the bar right now is pretty high to hike rates, and so I think if the economy gets stuck at inflation at current levels, they may not cut very many times and keep rates at an elevated level.